Now let's look at short exercise 8. Okay, short exercise 8, we're going to be doing some closing journal entries. So let's work on those. Okay, so closing entries, if you remember from the lecture, are where we're going to take our temporary accounts and what we say close them out. That means make those balances in those accounts zero so we can start fresh for the new accounting cycle, the new period. Okay, so what we do is we just do anything we have to do to make those accounts zero. So let's look here. It says Brett Tillman Enterprises had the following accounts and normal balances listed on its adjusted trial balance. So service revenue has a balance of $20,600. Salaries expense has a balance of $7,200. Rent expense a balance of $4,500, and advertising expense a balance of $3,400. And then we have Tillman Withdrawals has a balance of $3,800. They want us to journalize the closing entries. So the first step in our closing entries, and this is at the end of the period, so it would be like December 31st if it was actual year end. So December 31st, we're going to come in here, we're going to close out revenue. Well, revenue has a normal, credit balance. So to get rid of service revenue, we have to debit it. So we got to debit service revenue for the $20,600, and that's going to make that account balance zero. Well, what do we do with where are we closing it to? We're using that account called income summary account. Okay, so we're going to put $20,600 in that account. Okay, this is where we're closing out all of our temporary revenue and expenses. Okay. Then the next step was to close out all of our expenses, and expenses have a normal debit balance. So when we close them out, we're going to credit all of our expenses. So we've got salaries expense, $7,200, rent expense, $4,500, advertising expense, $3,400, and that's it. So we're going to close out these expenses as well to the income summary account. And remember, the income summary account is just a holding account, temporary holding account, where we're going to do a check to make sure we've closed out all of our revenue and expense items. Because in the problems we do, there's not a whole lot of accounts, but when you get to a real company, there are tons of accounts, and sometimes you might miss one. So this is a check for us to make sure that we've closed out all of the accounts. Because once we do, this balance in the income summary should equal net income. Okay? All right. Then the third step is to close out the income summary. Okay? So, but before we close it out, we have to know what the balance is in our income summary. All right, so let's try to calculate the balance in our income summary here. So we've got in the income summary, we credited the income summary in the first journal entry, $20,600. Then we credited it $15,100. So that means that this account has a credit balance, okay? So it has a credit balance of the $20,600 minus $15,100 of $5,500, okay? So that means that we had revenue of $5,500 in this this year. So to get this income summary to be zero, we've got to debit it. So that's going to be what our third journal entry is. We debit the income summary, $5,500, and we credit and close this out to the capital. And since we have Tillman Withdrawals, this is going to be Tillman capital. Okay, so that's the third one. The last and final step in the closing entries is to close out our withdrawals, and they are closed out directly to capital. All right. Now, withdrawals have a normal debit balance. So to make them 0, we have to credit Tillman withdrawals. Okay, credit Tillman withdrawals of $3,800 and debit our Tillman capital, $3,800. Okay, so there are closing entries for Tillman Enterprises. Okay, so if you have any questions on the closing entries, make sure you post your questions in the discussion forum or send me an email. It's better to ask those questions on the question board though, so other students can see it in case they need questions also, or have answers. They might have answers to your question or be wondering the same question and haven't asked it yet.